Hey everyone, this is KB here, and we're going to be looking at the S&P 500 and helping you understand on what exactly falls into it. So, first you got to know is about 500 companies make up the S&P 500. That's where it gets its name from. They're all US based, most of them are large cap stocks, and it's a diversified portfolio of different industries from tech, services, healthcare, and so forth. You ask what companies are actually in here. We've talked about tech, we got Apple, we got Google, we have other things, we have like Nike in there, we have Walmart, we have oil stocks, we have pharmaceutical stocks, and again, it's capped by the market capitalization of each company. You can kind of see tech is on the much heavier side, and you go all the way down to materials and different various things that are smaller parts of the industry. You can see the big red square is the whole tech sector, okay? And then we go down here, and then we're going to nitpick consumers, and then we're going to look at the little tiny box of Nike. Again, this gives you a overall look at the diversification of the S&P 500. So let's look at a quick chart here from like early 2001 to now. Basically, you're going to see that one dip is going to be the bubble of the internet crash, and then you're going to see the second one of the financial crisis of 08-09. You can kind of see there, ever since that last dip, we have been on a pretty crazy upward trend here. So the overall performance of the last 5 years, you can kind of see here breaking down in the percentage wise. And a quick little fact here, it goes up, the S&P 500 since its inception, about 9.8%. You can kind of see the last 5 years again, it has gone up quite a bit since then. So you're asking, like, hey, this is great. How do I actually get into the S&P 500? How do I buy shares of this? So there's actually two different ways. Since the S&P 500 is considered an index fund, you can buy index funds from various different companies, or you can get ETFs, which is a way of just kind of trading it through like a brokerage firm, almost like trading a stock, but it's just a index fund that's a stock. We'll get into more into that later. So let's look at an example of one of the best, most well-regarded Vanguard 500 index fund. This is a non-for-profit investment firm that uses its low-cost expense rates to advertise and get investors into it, which is a big growing point. Some examples of the ETFs that I talked about, you can kind of see they trade like they do stocks. So you can type in these different various tickers, as you can see, like, so Apple will be AAPL, you can do SPY or SPX. These are big funds that are electronically transferred through the stock exchange. So you can kind of see the overall power of the S&P 500 and how much diversification it brings to an investor, allows them to grow their money over time. But again, please remember that, again, investing, there's ups and downs as anything in life. You might lose money, you might make money. Again, just be very wary of this, be cautious. And again, I just want to thank everyone for sticking to this video, learning about the S&P 500. If you have any questions, please leave a comment. Don't forget to like, and if you consider subscribing, please do. Again, it's KB signing off. Peace.